Hello, chart watchers, and welcome to Market Watchers Live with Aaron Swinlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived on our site until the next show begins, so for generally for 24 hours. If you would like to review an older program, you can now find those at our YouTube channel or on Facebook. During today's show, please feel free to submit your ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, Aaron will provide me stock symbols from your questions, and I'll use those requests in the 10 and 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live now airs on Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. As you leave today's show, we'd love to hear your feedback. In the lower right portion of your screen, you should see a How'd We Do section with a link to a one-question survey. Let us know what you think of Market Watchers Live and anything we can do to improve the show. For those of you joining us for the first time today, welcome to the show. We are certainly glad you've chosen to be with us. And for our regulars, welcome back. Well, Aaron, we've started a new week, and shockingly, the market seems to be doing pretty well again.
I know, right? It's always, it seems like it's always up these days. Hard to be a bear when you're looking at these kinds of rising prices that I think, was it Arthur who coined the term Teflon rally? Because this is really what I would call that.
Yeah, not a whole lot of bad news is sticking, that's for sure. Market seems to just look past the bad news and embrace the good news. And that's what we're seeing again today. Of course, we did have a lot of good earnings reports from many of the key companies that lots of folks like to watch. We saw that again Thursday evening after the close when Apple came out, reported great results. And I know when you're talking about the scooters, and some of the top scooters, we're always talking about Align Technology, which is a healthcare company, ALGN, and they also came through with some really good earnings on Thursday evening. So just seems like the leaders keep leading and the followers keep following, and everything wants to keep going higher.
Absolutely. I'm enjoying cool weather, by the way. How's your weather over there in Carolina?
It's been pretty nice. You know, the East Coast this time of year, at least the southeastern part of the U.S., is pretty nice. Usually you can get 60s, 70s, and we've been hanging in the 70s. Was able to get out and play some golf late last week. So yeah, weather's been good.
Excellent. Yeah, I'm enjoying the cool weather. We even got just a slight bit of rain, which is what we totally needed for the mountains, because they needed all that dust and ash. We needed it to have some rain, just enough though, no mudslides. So we got just enough to sort of wet the ground, which was a good start.
Yeah, we don't need to be going from fires to mudslides. I mean, just a little bit of rain, not too much.
Exactly.
We got a lot going today. I do want to mention a few things before we get started with the show. Back on Saturday, just a couple of days ago, ChartWatchers' newest newsletter came out, and so all the fresh articles from many of the authors at Stock Charts were featured in the ChartWatchers newsletter on Saturday. We'll talk about that later in the show, but some great articles there. I do want to mention Greg Schnell is back. He took quite a trip, but he is back, and he'll be with us tomorrow talking about energy and point and figure charts. So definitely make sure you tune in tomorrow to get the latest from Greg Schnell. We will be starting a new segment on Wednesday, Everything Stock Charts. And we're going to have one of the developers here at Stock Charts, Bill Shelby. Many of you probably know Bill, but he's going to be on here talking about price alerts. So definitely be here on Wednesday. And then, of course, Friday, we talked about this last week, but Aaron, you're going to have a segment coming up on chart patterns on Friday. So those of you that want to learn more about chart patterns and what to look for and what to expect if they execute, definitely should tune into the show on Friday. So with that, I'm going to let Aaron take over for today's agenda and to give you the first market update.
All righty. Let's get on it. So we're going to start. Remember, I do the market updates on the half hour. So we'll start with the first one shortly. Talking technically, Tom is going to let us know what the latest economic reports are, if we had any upgrades or downgrades. Of course, it's Monday, so it's Monday setup time. We'll take a look at the Monday setups from last week and give you our thoughts on this week. Tom has an earnings spotlight for you. 10 and 10 to 1 favorite. And here is the teaser. The first one we're going to do is REMX. So if you wanted to go look at that chart, make your own notes when Tom goes over it at 10 and 10 to 1. You can see how you shaped up with his thoughts. I'll be giving you a decision point report today on Monday, let you know what I'm seeing as far as indicators to get you ready for the week. And we'll finish up with mailbag and wrap up if we have questions and we actually have time. That seems to be the one that we usually end up not having the time for, but we'll do our best. So, and with that, I'm going to move us to our first market update. And here we go. All right, so I'm going to start with our candle glance, make sure that it is completely up to date here. There we go. So we can see the markets, have been in the positive territory most of the day. Looked like we were heading up to make some more all-time highs. We did get some intraday all-time highs, but now we've seen the market pull back here to really mostly unchanged. We're getting to that area where we're not seeing much of anything one way or the other. Russell 2000, look at that big move we had early this morning, followed by a complete breakdown of the move. Now we're heading back down again, still in the positive. Wilshire 5000 is now down slightly. Treasury yields are down, looking at 23.20 right now. UUP, the dollar is down slightly, and commodities are rising nicely. And a lot of that, I think, has to do with oil, which is really starting to take off right now. I'll be talking about gold and oil later in the decision point report. But we can see gold is heading straight up as well, which, like I said, I've been bearish gold, so it just figures. We've got advances leading declines at this time. So let's go back to the member homepage here. And I want to give you a quick look at our market summary so we can see which industries, groups, and sectors are doing the best. And currently we can see, as far as the major indexes, NASDAQ 100, interesting to see the S&P 400 and see some of these small caps getting up here above the S&P 100. We're seeing a little bit of a comeback on those small caps. Right now, sector spiders, energy is just taking off. And I know Greg Schnell wrote about that in ChartWatchers. Consumer staples really getting hit hard right now, down 70 cents on XLP. And we can see, as far as industries, not a surprise to see gas and oil services, oil, gold, all of those are at the top of the list currently. And biotech's paper, banks are the losers so far today. International ETFs, Russia and Brazil are topping the list, with laggards Spain and Netherlands at this point. And I'm going to go one more time back to our member homepage. And I wanted to give you a look at some of the most active today, what we're seeing as far as the S&P 500. Most active, AMD, Qualcomm, percent up today. Michael Kors is making a big move here, almost up 15%, huge gap up. I'm guessing, Tom, there was earnings or some sort of announcement going on there. But we can see that the on-balance volume has been trailing off. So this is a pretty interesting move that we're getting right now. But you can see the scooters stayed in that hot zone since August, most of that time. So that's all I have for our first market update. And I'm going to turn it back to you, Tom.
Okay, yeah, Michael Kors did come out with earnings, and they beat on their top and bottom lines. They actually scaled back their guidance a little bit on revenue, so I was surprised to see the move to the upside. But I try not to argue with price action. We're getting a big move to the upside and heavy volume, so obviously traders are pretty happy with the report. And I guess despite what may be perceived a little bit as negative guidance going forward. But yeah, the stock's doing really well. What I thought I would do today, at least to start, I wanted to show you a couple of, a few charts regarding the ETFs, the sector ETFs, because I like to look at this just as a reminder once in a while. It gets a little mundane, maybe boring to look at on a daily basis, but once a week or every couple of weeks, I think it's a good idea just to take a step back and look at how each of the sectors, not only how it's performing in absolute terms, but how each sector is performing relative to the S&P 500. So you can see here, this is technology group. We've continued to go higher. You can see even over the last 4 or 5 weeks as we're making it through earnings season, Technology continues to power ahead. There's no question where leadership is coming from in this market. Technology continues to lead to the upside. And because it's one of the more aggressive areas of the market, I find this to be bullish to see this group continuing to lead to the upside. And as we go through the various sectors, that was technology. Here are your financials. So financials, not the same kind of move to the upside, but we are breaking out to new highs nonetheless. And on a relative basis, we're near the highs that we've seen in 2017, although we are up against some relative resistance. And I noticed that financials were the worst performing group on Friday because the 10-year Treasury yield has been struggling. It's down again, as you mentioned earlier, Aaron. And so the financial group is just kind of pausing and hesitating, but there's nothing bad here on the chart. We're just seeing a little bit of rotation, and that rotation is occurring about where you would expect looking at the relative ratio. We move on to the industrials, and the industrials on a relative basis continue to move up, and on an absolute basis continue to move up. Nothing wrong here with this group. And then we move on to the consumer discretionary. This is the fourth of the four aggressive areas. Consumer discretionary just made a breakout over recent tops. When we go back over the last several months, we really struggled to get above about 91 or so, but we've made that move. We've gone back. We tested the rising 20-week moving average, and now we are continuing to push to the upside. So I think consumer discretionary looks good on an absolute basis, and it's also down close to the breakout level on a relative basis. It's relative breakout that occurred going back into the middle part of 2015. We've been consolidating for a while. We've been underperforming. Consumer discretionary has been underperforming since May versus the S&P 500. But this looks like an area where we could be starting to turn, and it's coming at a time when we're breaking out on an absolute basis. So I find consumer discretionary to be very interesting at this point. Energy, as Aaron also mentioned, this group is really starting to catch fire. The oil prices this morning, crude oil was up 2.68% today. The last I saw, up to $57.09 per barrel. We really struggled for 2.5 years to get through $55 a barrel, and now we've made it through, and energy shares are taking off. But you can see the more bullish action that has been taking place. We were in a downtrend throughout 2017 in the XLE. We broke that downtrend. Notice we pulled back, hit the rising 20-week EMA, and we're bouncing to new highs again. Very bullish, I think, on the XLE. On a relative basis, it looks like this relative downtrend has broken, and I would like to see us get back up above this 0.028 level that held as support back in 2016, and since breaking below it, we haven't been able to get back through. So I think this absolute breakout to the upside, along with a relative breakout, would really aid the energy space. Basic materials continues to trend higher, and on a relative basis, we're threatening a pretty key breakout here. So I think this group continues to look fairly strong. Healthcare, no doubt with this move to the upside that the absolute chart is fine, but on a relative basis, it was in a nice uptrend. It's actually broken this uptrend over the past few weeks, and that's a little bit upsetting, although I still think healthcare will go along for the ride, and we're starting to see some strength in the I think it was the medical supplies area, and also biotechs were starting to bounce off a key support area. So I do look for the XLV to continue to perform with the market. You just wonder whether or not they're going to be that leader that we saw from a couple of months ago. The last two groups, consumer staples, this is defensive area. This is really the only area in the market that I think is broken, at least in the short term, on an absolute basis. We had broken out above prior highs at around 54, and we've since given that level back, and we're now below it. And you can see on a relative basis, this group has not been performing well. But this relative weakness is really what you want to see in a bull market. You don't want a bull market being led by consumer staples. You want to see consumer staples. You want to see all areas of the market going up, but you want to see consumer staples actually one of the laggards, and that has been the case for sure. The last group, another defensive group, continues to perform okay on an absolute basis, but you can see also topped on a relative basis back in 2016 and has really meandered lower for the past year and 3 months or so. So I think overall, when I look at all these different sectors, I remain very bullish the market. But let's take a look at a few things. First, with crude oil prices, I'm going to pull up this XLE chart because this is the best performing group. It's up almost 2% today, up $1.27 on the XLE. We're almost to $70. You can see the hesitation that took place for the past 5 or 6 weeks at 69. We're clearing that today with crude oil up more than 2%, as I mentioned earlier. So that's no doubt we're getting leadership there. I did mention the XLY quite a bit, which is consumer discretionary ETF. And you can see here, this was the triple top that we had. I think I said 91. Actually, it was at 92. And we saw that breakout, went back down, went briefly below 92, but hit that rising 20-day and now starting to recover. I think this group looks pretty good. Another break to a new high would be very bullish for the discretionary. Now, some key areas within discretionary, and then we're going to get into our Monday setups. There were a couple of key industry groups that I wanted to mention today. One is the clothing and accessories, the DJUSCF. A couple of things on this chart that really stood out to me. Number one, remember we were talking about these reversing candlesticks, false breakouts. Take a look at what happened here on the DJUSCF. We had a high established just above 280 back in August. We made this big push, looked like we were getting a breakout, and we failed. And since then, look at the distribution that's taken place, the selling. Now, it did come down. It's hit some price support, and we're starting to get a little bounce, and we are in an uptrend. But, question always surfaces, when do I sell a stock or when do I sell a particular area of the market? And I think when you see these types of candlesticks, that is a clue in the short term that we probably have topped. And I say probably, there are no guarantees in the market, but that type of reversal is generally a sign that it's probably topped in the near term. And that's what we've seen here. A couple other areas. Gambling stocks. I'm a big fan of this area right now, and it looks like the sideways consolidation may come to an end with a breakout today. Let's see whether or not we can hold it into the close. There were a couple of things on this chart that I thought were worth watching. First of all, keep in mind that we had a false breakout before back in September where we tried to take out the June high, failed, and then that led to more consolidation. This gets very frustrating if you're in the group. Some of the stocks continue to perform well, but others have struggled and consolidated. The good news is I think for the most part, we have been sideways consolidating. So I think this is a pattern that will ultimately end with a breakout to the upside. We're trying to get that today. What we don't want to see is this long tail to the upside and a failure. So coming back down, but on a breakout, look at the MACD. Now that it's been going sideways and kind of settled in around that center line, now with this breakout, we seem to be in really good position with the MACD. This is just an indication of accelerating momentum to the upside. So I think the gambling stocks look pretty good here. The other thing that you could do is draw this line across and then take a line here. I'll just go ahead and do that. But this also is taking the shape of an ascending triangle. So this is a beautiful A, B, C, D, and the breakout is E. So this is a really nice ascending triangle pattern off of this uptrend as well. So whether you call it sideways or rectangular consolidation, maybe a long-term flag, or whether you call it ascending triangle, doesn't really matter what you call it. All of these are bullish continuation patterns, in my opinion. So a breakout should be respected. Let's see, a couple more real quick. I know we've talked about the restaurants recently. They were very bullish. They pulled back. They still look very bullish to me as we speak here. You can see that the group had been going down. It came up and looks to me like almost put in the right side of a neckline here. And so we got a little bit of a move down, bounced to a neckline, put in a lower low, came up, bounced temporarily to put in that right shoulder, and now breaking out. You can see the volume picking up. So restaurants and bars to me look like a pretty solid area. And then the last one, talked about some pretty bullish areas. Now I'm going to talk to you about one that I don't like so much, and this is the toys group. And after sideways consolidating, you expect a breakout to the upside, but we didn't get there. And now potentially we are breaking down to the downside. If we don't hold these recent lows around the 970 level, it looks to me like this is a group that could fall back to 925. And I do know that this is a group that does not do particularly well in November and December and even into January around the holidays. You might think the toys would be really a big mover in the late or latter part of the year, but that's really not the case. This is a group that tends to struggle and underperform the S&P during November and December and into January. So a technical breakdown as we head into November is not exactly what I wanted to see here. So with that, we are going to get into our Monday setups. I know, let's see, Aaron, you had Etsy last week.
I did.
And according to my notes, you had Etsy at, let's see, where did you had it at 1658?
Yep.
And it is having a very nice day today for sure. Stock is up 52 cents today to 1711. So that gives you 42 cents and 11. That's 53 cents on a 7 or less than a 17. So you're up over 3% on that. That's a nice trade for the week.
Yeah. I actually bought into that one, so I'm pretty happy.
Oh, cool.
Yeah. I think I'm going to stick it out.
Yeah. I actually have mine as well. And mine had a good week as well, though it's been pulling back. I think it's time that we end the contest because I know heading into the day, I think when we started the day, I'm going to pull up the 5-minute chart because I know it had gotten up to 39.20 and JD had gotten in at 37.12. So it was up over $2 at the open, but it's been slowly eroding.
Well, we can give you earlier today when the show went on at noon.
Yeah, no, it only noon or, now is the time. So this is what we always go with. So 38.78. Which is what, $1.60. So it's about 4.5%, I would say.
See?
Both did very well. I mean, anytime you can trade a stock, in this case, 4.5% or over 3% with Etsy, the S&P didn't go up 3% or 4.5%. So that's what you're looking to do when you're trading. You're trying to outperform. So I would say both were a success.
Yay.
I think they both look pretty good. I actually like Etsy a lot with this breakout today. I think
right. That's what I was thinking. I'm like, oh, I'm going to definitely keep this one with what I got it at. So
yeah, I think when you mentioned it last week, you were talking about a possible target up near 18, and with the volume coming in and the MACD turning up, and I'm sure your PMO looks great at this point. I would say 18 certainly is within the realm of short-term possibilities.
That's where I'm looking for it.
JD, on the other hand, I think they report earnings, and it might be next week sometime. So you want to keep that in mind if you're in it. I am in this one.
Oh, good thinking.
I will not be in long. In fact, if we move back below the 20-day moving average, I will get out if we close back below the 20-day. So I'm kind of watching it today. I don't want to see a bearish engulfing candle or something take place here right at the 20-day. So that's something to keep in mind. But last week is over.
That's time.
We're only as good as our next pick.
Right.
So we got to move forward. I tell you what, I'm going to let you go first because I am still on the fence as to which one I'm going with.
Oh, gosh. I know. I struggled this morning because I ran my scan and I ended up with, I think it was 19 at the time. Let me go to my homepage here and get you in here so you can see what I'm looking at. All right. So I ran my the PMO scan that I adore and everybody asks, where is it? And it is I think it's been in past Market Watchers recaps. I know I've written about them. You should be able to find it. If you can't, feel free to drop an email to Market Watchers at stockcharts.com and I'll find it for you. But in any case, this was the one I ran. I'm going to run it right now, even though I know I'm going to end up with a difference. So see, I ended up with 11 entries this time. Let me go, though, to the actual list that has mine in it. And that would be in Monday setups. And there are 5 in there right now. And I was struggling, too, as to which one I wanted to go with. But I want to show you the ones. Alamo, I almost went with, but it's already making quite this move. But it is a nice breakout move. I think if I were to pick it for a Monday setup, I'd want to see it coming back down just a little, just so I could get a little bit more points out of it for Monday setup. But as far as a stock setting up, I think Alamo looks pretty good right now. LKQ is the other one I was peeking at. And I'm glad I opted not to pick this one because I could see already the PMO, which was rising this morning when I ran my scan, is now turned down. So I will delete that. I know I wouldn't want that as a Monday setup. And then I had Northrop Grumman. And I like the look of it because you could kind of call that a double bottom, but you have that big shoot through the middle there. But that poses some overhead resistance. So I thought that as far as again a Monday setup, I'd want a little bit more possibility on reward. So I passed up on Northrop Grumman, and then Phillips was the other one that I opted out of, but I still think looks really nice. But it's the thing is it's coming up on overhead resistance, but it is if you look at the last price, it has broken out above previous prices there. So I think it still looks good, and of course Phillips 66 is in that oil and gas arena energy, which is doing quite well right now. But I opted not to pick it. I'm going to go with the Cedar Income Fund. And here is why. I see a scooter that's rising. I like that. OBV is turning direction, and I like that. I have a PMO that is setting up for a buy signal here, which is always nice. And then I had this breakout above what I would call pretty serious overhead resistance right here. When you compare the zone it was trading in back in 2016 and into the beginning of 2017, and we've now broken up above that into that zone. So I really like this. Of course, it's a low price point on the stock, so I'll have to see how that turns out for me. But I'm looking for a move to 620. Now, whether that'll happen during the week, I don't know. But I thought this one had the most promising setup, so this is the one I'm going with, which is Cedar Income Fund, CDR, and last price is 584.
All right, CDR, and the last price is 584. Okay, there you have it.
All right, we'll see how that one does.
All right, now let me flip over here. And first, what I want to do is just show everyone where you can find these setups. Because I do, under the blogs, I post usually Sunday night or Monday morning. Sometimes I'm doing it right before the show. Sometimes I'm able to get to it on Sunday night. I actually did these yesterday and put them in here. But if you go into my blog for today, actually not go into the just trading places, you'll see up here, click here to see the live chart list. That's where I put the setups. And so you'll see not only this week's, but probably the last 3 weeks along with it. I think this chart list will store up to 30 charts. So however long it goes back, could be 3, 4, 5 weeks. I keep those on here. So if you take a look at this and click on that, you will see the setups for this week. So November 6th, first one is Las Vegas Sands. I mentioned the gambling stocks making a breakout, potentially making a breakout. And we saw this with Las Vegas Sands on Friday, actually making the breakout. Volume has actually been pretty solid when you look back over the past few months. I think volume's been picking up, signs of accumulation, very similar to the gambling index, where we've had these almost equal highs here, been consolidating after a breakout earlier in the summer, and now we are finally making the breakout again, MACD turning up off the center line. So I think this one looks good. Trimble, TRMB, big earnings report. Stock did extremely well, got up to $44, and it since came all the way back down to its breakout level. Actually even went a little bit below before reversing on Friday, and it looks like it's continuing that push back up to the upside. I'd be looking for a move back up to test the 43, 44 area. Biogen came out, I believe, with their earnings recently, and all they did, I think it was right here, even though the reaction wasn't that great with this particular earnings report, I think the overall technicals remain solid. And notice that the low went down and tested a previous low and is now sideways consolidating, holding on to support. So I think this 295 to 300 area is a really big support on Biogen. The stock was up near 350 recently, and it's now hovering in the lower 300s. I would look for another move higher in Biogen. Blackstone, I really like this move here to the upside with nice increasing volume. It broke out, and in coming back down, I like that recovery that it had back on Thursday. then had a bullish engulfing candle on Friday. So really back-to-back reversing candles, and we are trying to shoot higher off of that move. So I think Blackstone looks good. Cooper companies came back down right to the gap support zone, the bottom and top of gap supports between about 220, 227 or so. And it looks like it's trying to bounce off of that. And the last one is GM, which is was overbought. You can see higher prices, lower MACD. We had a negative divergence in play, and today's low went right down to the 50-day moving average. And I'll tell you, I'm really struggling with going with either GM or with Las Vegas Sands. But this is the one I put into my article for today, Las Vegas Sands. That was the Monday setup in my blog article, and I'm going to go ahead and go with it. So right now we got a price of 66.64. I even had my notes. I had written down General Motors, but I'm making a last minute move back to Las Vegas Sands. And it's going to be at a price of 66.64. So there you have it. So those are our setups for this week, and we'll revisit those next Monday, right before we give you our next picks for that week. And yeah, so I'm going to turn it back over. I know we got another market update.
Indeed.
I'll let you get on with that, Aaron.
All right. Give me a moment here. I will take the screen. All right. What's been going on here? Okay, so I'm going to take us real quick to our candle glance so you can just see what's been going on with the markets. We were heading down at the half hour ago when I did our previous market update, but you can see prices are starting to bounce now and head back up. So we'll have to see if they can continue with that momentum. Wilshire 5000, though, is still pretty much sideways, and I would say that the S&P 500 is trading mostly sideways right now as well. Treasury yields are down. UUP, the dollar, is falling, and we can see commodities are doing well, given, of course, USO's having oil in general is having a great day. Looks like we're forming a really short-term flag here on USO, taking a little breather before possibly moving higher. Gold is just taking off today, straight up. And we can see with the VIX, it is rising, and which is interesting, but it's still at low readings, below 10, currently at 955. Advances are leading declines. Now I'm going to take us back to our member homepage. And let's look at the big scooter movers real quick here. And we can see as far as our top 10, First Solar, Align, NRG, and we can see top up, who's moving fastest. Interestingly, AMT, now remember we already looked at cores. AMT is got its scooter moving up over 26 points right now. And again, really nice gap up. Looks like Michael Kors heading straight up, broke above overhead resistance. Look at this PMO. It's now heading straight up, obviously. But even before that, we had a buy signal and it was moving up nicely, even before this really nice breakout. But you can see Scooter now in the hot zone. And as far as OBV, a little bit of a decline on those tops. But this was the reading from last Friday. It'll likely change and be moving quite high, maybe even above that previous top. So we'll be looking for that. And that's all I have for our second market update. I think we will move it back to you, Tom, because I think you were going to look at an earnings spotlight.
Yeah, I want to go through. I'm going to pull up a stock that really looks interesting to me, at least one I want to kind of keep an eye on. This is a company. It's actually in the medical equipment area. But first, let me go ahead to the homepage. It's Stryker. So the symbol is SYK. And you can see the huge move the stock made with its recent earnings report. And this was after it had sideways consolidated over the past few months. So really hadn't performed as well as the overall market. But we did get a great reaction to the earnings report. You can see volume was very heavy on the stock. We came right back down. And I tend to watch. I don't jump right in after an earnings report, after a gap. I like to see how it trades and get a general sense of where I think I might be able to get in. And with it coming back down the very next day and on pretty heavy volume, that tells me that maybe it's going to struggle to go higher in the short term. Maybe we need to come down, fill this gap, or possibly hit that rising 20-day moving average. But Stryker did come out with revenues in their last quarter that were $3.01 billion with a B. And Wall Street was expecting $2.97 billion, so they beat on their top line. And earnings per share was $1.52, and the market was only expecting $1.50. So they did beat on top and bottom line, got a great reaction here. Really nice candle. But again, that the fact that we came right back down and gave away a lot of those gains the next day is just telling me that we might be able to find a little bit better entry into Stryker. So I'm watching it. I'm keeping it on a chart list that I definitely want to continue to keep an eye on. But I would actually love to see it maybe pull back, hit some key support, maybe watch the RSI drop down below 50 into the 40s. And that would be the time, I think, where the reward to risk likely would set up pretty strong. So that was one that I thought was really kind of an interesting stock. One to keep an eye on is certainly over the next few weeks as it hopefully will consolidate a little bit lower and a little bit further. Now, what the other thing I wanted to mention was that, and I mentioned this at the very opening, that there was another ChartWatchers newsletter that came out this weekend. And if you go in, if you're in the home page and you click on blogs and you scroll down, you're going to see on the right-hand side, join ChartWatchers. And we talk about this often, but I'm going to continue to remind those of you who maybe are not members or not subscribers to ChartWatchers to sign up. All you have to do, type in your email address here and click the sign up button. And it's free. And so I can't think of any reason why you wouldn't want to hear from John Murphy, among others, every 2 weeks on what's going on with the market. So I thought what I would do, and Aaron, feel free to join in. I'm going to go through that ChartWatchers newsletter, some of the articles that were published over the weekend. I'll start with mine because I know that one really well. But actually, I think I was up here. Yeah. The point I was trying to make with my article was that, you look around the world and we're seeing markets around the world doing really well. But there are certain markets that I focus on more than others because I trade in the U.S. And so what's going on around the other parts of the world, for the most part, don't concern me, except when I start thinking about the big picture. I mean, we are living in a global environment. Maybe 20 years ago, things were a lot different, but now there's a lot of U.S. companies are doing business overseas. A lot of overseas companies are doing business here in the U.S. And so if you ignore what's taking place globally, I think you're going to be doing yourself a big disservice. So what I tried to point out in this article was that the correlation between the U.S. stock market, and I use the S&P 500 as a benchmark, the correlation between the S&P 500 and all of the other foreign markets are not all created equal. They're all different. And so I just pulled up one simple chart on the S&P 500 going back the last 25 years. And I'm going to click on this and then scroll down so everybody can see. But here's the S&P 500 movement. You can see great rally off the 2009 lows. Clearly, we're in a bull market. Kind of hard to argue with this bull market at this point. But down below, what I did is I set up correlations between the S&P 500 and some of the key markets in Europe and in Asia. So I've got the German DAX. I have the London FTSE, the French CAC. Then I've got the China Shanghai, Hong Kong's Hang Seng, and Tokyo's Nikkei. And if you look at all of these, first of all, most of them have correlation readings which are above zero. And if you're not familiar with the correlation indicator, essentially what you're doing is you're trying to see, do any two asset groups or stocks or sectors or whatever you're comparing, do the two tend to move in the same direction as one another? Are they positively correlated, or do they tend to move opposite, negative correlation, or do they just kind of meander back and forth and really not give us a great sense of correlation at all? And so what I think if you look at these, you'll see that the correlation with the German DAX is almost always in positive territory. This is going back the last 25 years. We've had a couple of blips where we have gone down below the zero line, but we actually stay up near one throughout much of these last 25 years. And a reading of one means that they're going up hand in hand. So I think when you start thinking about, okay, what do global markets mean to the U.S. or vice versa, I think this is a really important indication, because this is telling me that what goes on in Germany is pretty important to what goes on here in the U.S. And so I'm always watching the German index to see if it's breaking out, because if it's breaking out along with the S&P 500, that just gives me a little bit more confirmation of what I'm seeing here in the U.S. Same thing really with looking at London. You can see here's the London reading, and only a couple of moves to the downside below zero here, most of which, again, we've stay situated near one. The French CAC, again, most everything in positive. Now I want to take you to China, because I've seen so many times on CNBC where they try to tell you that what's going on in the US is related to something that happened over in China. And I always shake my head because I know what this correlation is. And you tell me if there's a real strong correlation between China and the US. I mean, it's all over the place, back and forth. I just, it's not that I don't care what's going on in China, but if I'm trying to make decisions on what's going on in the US, this, following the Shanghai doesn't really do me a whole lot of good, because if that's having a problem, it doesn't necessarily mean we're going to have a problem based on 25 years worth of history. Then you look at the Hang Seng, a little bit more positive correlation here, and same thing I would say with the Nikkei. So anytime you get that positive confirmation of strong correlation, and those areas of the world are seeing breakouts as well, it makes me feel pretty bullish about the market. I'll just go down here for a second so that you can see how you can set this chart up, but it's just using the correlation indicator, and then your parameters will come up as a default, the S&P 500, and you just change them to the various indexes that you want to look at. And the other thing is this 20 period, this is again just the default. So if you want to see maybe a smoothing out of the correlation, maybe you could up it to 50 periods or 40 periods. And if you want to get more near term, then maybe shrink it down to 10 periods. But you can play around with that. But I think it's a pretty interesting chart. The other thing I wanted to mention, and then I'm going to let Aaron go over some things here for you. But the other part that I thought was kind of interesting, and the other article, and I read them all, by the way, they're all very good articles, but I really was fascinated by Arthur's article on uptrends, what to ignore and what to watch. And he brilliantly simplified what we do as technicians. And the key, and you can go back and read this article, but really what he's trying to say is that don't fight the uptrend. If there's an uptrend in play, essentially you want to play by bull market rules and not try to look for a topping pattern, not try to make something out of the chart that isn't there. Really simplify it and just stick with what's working, which in an uptrending market is the long side of the trade, not the short side of the trade. And so a couple of interesting points that he made, like with Apple, is that you tend to look at prior highs as being resistance. But when you're in a bull market and you're in an uptrending stock, a lot of times those prior resistance levels don't provide a whole lot of resistance, and we just simply keep going through. And so I thought it was a great article. If you get down to the bottom of it, his last paragraph I thought was very well put. He said, as Charles Dow put it, the trend is in force until it's proven otherwise. Furthermore, neither the length nor the duration can be forecast. This is valuable information that chartists can use to streamline their analysis process. In general, we should ignore bearish patterns, bearish signals, overbought conditions, and resistance when the trend is up. Instead, focus on bullish patterns, bullish signals, oversold conditions, and support during uptrends. So just very basic, but gets to the heart of what we do as technicians. So I thought that was a really great article that he wrote.
Yeah, absolutely. That's that question of the bear market rules, bull market rules. And Carl, my father, I mean, that was one of the things he taught me right up front was, don't expect things like overbought conditions to be a problem in a bull market. Don't look for a breakdown when you've got a chart pattern that's typically bearish. Don't expect the breakdown necessarily if you're in a strong bull market. So it's the same ideas. And again, when you're looking for investments in a bull market, why would you go and look for shorting opportunities? I mean, that's just, look for you want to go with the flow there of the river or the ocean or however it is at the time. Right now, I would say we have a hurricane rally. So I wouldn't be trying to find something moving against those winds.
Yep, I would agree. I don't know if you had a chance to look at any of those. I know that Greg Schnell, he had a great article on the energy. And of course, he follows that very closely, as you do.
Yes, exactly. So I do like to keep a close eye on Greg. So I'm at the let's see. Are you seeing the right screen? I feel like you're not.
I think you got it.
Okay, good. All right, there we go. All right, so yes, here we go. We're going to go through and Tom's, and he just went through Arthur's. Like we were saying, John Murphy. Hello, free every 2 weeks in your email or your email box. You can't beat that. And yes, so he went over energy. I'm going to just show you my article really quick, and I'll be going over this more in the decision point report. But we ended up getting some interesting buy signals on the scoreboards, and one of the interesting ones, honestly, was not on the scoreboard, and that was the long-term trend model buy signal for USO. And I will show you that chart and go over it in more detail during the decision point report. But I wanted to look at very quickly what Greg was talking about. And he follows WTIC. That's on the bottom part of my chart with USO. And he noted, as I've noted on Friday, that we're finally seeing a breakout we haven't seen in well over 2 years with oil. We're now above that $55 mark, and that is really a great sign. And of course, you can look at the PPO, which is very similar to the PMO. RSI, getting a little bit higher in the zone though, but oil just looks really good. And as part of that, and you can see he did gasoline as well, and there's Brent. That one really had the nice breakout, and honestly, it came a day or two before we saw it on WTIC. So we actually had a little bit of a warning, I guess you could say. But anyway, I thought that was very interesting. He was looking at all of the different oil contracts, and he really concentrates on the commodities, and so he is the guy to ask the questions. I know we had a question in the chat box, and in regards to oil, and I pretty much said, you know what, you really need to ask Greg that, or I will tomorrow, because he's the guy. But I wanted to look at XLE really quick on one of my charts. And if you download the Decision Point Market Indicator Chart Pack, you will get all of these indicators here. And I chose the stocks above their 200-day EMA, their 250 and 20-day EMAs. And you can see that we have it for all of the sector spiders. And we also have it, of course, for the major indexes as well. So I decided to go into XLE since that's what we've been talking about. And, I like to look at it's really simple, obviously, the stocks above their various EMAs, I think is really helpful. You've got the 200-day is your longer term picture. You've got an intermediate term picture when you look at those above the 50. And of course, the shorter term picture if they're above their 20. And look at the move that all three have made. But what I really want you to note is that, after this rally, we had this great rally. We saw stocks above their 50-day EMA, 100% of them at one point. And so what I want to point out is that there's still a lot more room for energy to grow before we start seeing what you might consider an overbought reading, where everybody is above their EMAs. But I thought that was a really interesting chart. And, you can also go and check out a few other things here, like the financials at this point and what they look like and here you go. So see, we hit those highs, we got overbought, and now we're starting to turn over here in the financials as far as what we're seeing as far as stocks being above or below the 50-day EMA. And when I see all of these starting to turn down like this, I would be a little bit concerned. So it's a great area to go look. And the ChartWatchers, Greg is awesome. Love him. And yes, he is going to be on the show tomorrow briefly. I know both of us can't wait to talk to him because he's been gone for a while.
Yeah, he's been out. He's been out for a while, And when I'm looking at those charts that you're showing, the over or the number of stocks in different areas that are above the 50-day and 200-day EMA, keep in mind that when you're in a group that is moving to the upside, you're going to see a lot of stocks that are above those moving averages, or the stock or that particular sector wouldn't be moving higher. I mean, it kind of one goes with the other. When prices are moving up in a group, chances are you're going to see that most of the stocks in that group, almost all of them in many cases, will be up above their 50-day moving average. One thing that would bother me when I look at this, just thinking from a common sense perspective, is when the market or when a group continues moving higher, but the number of stocks that are above their 50 days starts to drop. So that to me tells me that fewer and fewer stocks are leading that move to the upside. And that can be a little bothersome, especially if confirmed by a breakdown in the group.
Right. So excellent charts, though. They are available in the Decision Point Market Indicator chart pack. Easy to get to. You just go to your account on the, let's see here, I can get, yes, your account. And you'll find all of the chart packs. You can manage your chart packs and download them. You have to be an extra member or above, simply because as a basic member, you only get one chart list. So you can't download multiple chart lists if you can only have one. But if you're an extra member or above, they're free. So I would consider installing them. It's very easy to do, again, from your account page.
Yep. And it is time. It is time for the 10 in 10. And I have to tell you, I already cheated. You gave me the first stock, so I've already annotated it.
All right, perfect. That'll help us stay on time here and get through it. So yes, our first one was REMX.
All right, and I'm going to bring it up, and everyone should have it up on their screen now. Actually, do you see it? Yeah, there it is. Okay, so REMX, here's the problem I have with this particular ETF. It's in a beautiful uptrend. So this is kind of what Arthur's article was getting back to, is that really you don't want to argue too much. When you're in an uptrend, you're in an uptrend. However, as a shorter term trader, I look for times when maybe we're going to get a pause in one area, and so I can put money to work in another area that maybe isn't poised for that pause. What I'm seeing with REMX is the higher prices, the lower MACD reading. So I thought going into October, we were starting to show some slowing price momentum. And if you notice over the past few weeks, as we've been trying to challenge the high, it seems like the interest has really waned on this group. So I love the uptrend. I think it could continue to consolidate for a period of time. These pink arrows that I put in here are what I look for after a negative divergence. I look for a center line test on the MACD. I look for a 50-day test using the moving average here on the price chart. So that is what I would be looking for. I think this is a nice looking group. I expect it to go higher, but I wouldn't be surprised to see more consolidation in the near term, and that might get a little bit frustrating to a short-term trader.
All right. And then next one I have is Bluebird Blue.
Yeah, I think Blue may have been downgraded earlier today, but it did break out, put in a little shooting star candle on some heavy volume last week. So I think this is just a temporary move to the downside. What I would be looking for, we've seen some pretty solid support on Blue at the rising 20-day moving average. We went just a little bit below it there, but you can kind of see the 20-day moving average has been pretty key support. So with this move to the downside, I'm going to continue to watch that rising 20-day moving average, but I'm bullish Blue. I think this one goes higher.
All right, very good. One that we talked about a lot about a month ago, I guess, would be IBB, the biotechs.
Yeah, I actually like what the biotechs did on Friday. And so let me pull that up and see what it's doing today. Well, we did gap higher. We've pulled back, so we're down just a fraction today. But from a longer term perspective, you might look at this and say, well, it broke down below the moving averages. Well, sometimes the prior lows can act as really good support. And so on the IBB, what I would be looking at, there's a couple of levels, but basically it's right there. That's the number one. You got the 200-day coming in at about 305. But really, to me, the most important level on this chart is going to be down close to 300. We got up to 340. Money's rotated away from biotechs the past few weeks. I think the closer you get down to 300, the better the reward to risk is. I would be a buyer. I think biotech's getting closer to a bottom than it is to a breakdown.
All right. Let's see. Next one I have for you is APC.
All right. I think that's Anadarko. Mm-hmm. All right. Well, along with energy stocks, this one's definitely improving. And I think really, if you remember back to the discussion that we had with Bruce Frazier, I think this one really is kind of an example, maybe a poster child of what Bruce had talked about. And remember, he talked about these last ditch moves to the downside. Notice APC as it went down below this prior support. Look at the volume. Nothing close to what we had seen on the selling previously. And now we're starting to get pretty good news, gap ups, volume trends turning higher. And look now today, we are making a pretty sizable breakout, a pretty significant breakout above $50. So I would be bullish APC.
All right. Next one I have for you, another APA, Apache, I think it is.
All right, APA, I think you are correct. Another one probably taking a little bit longer, still in the same space, but I would just say at this point that it's. No, hold on one second. Sorry. At this point, I think it's just a matter of trying to get back up above these prior highs. So I think that for now, it's having a good day, but it's one I probably wouldn't chase, only because I'm thinking that it's probably going to sideways consolidate for a little bit longer. There's that prior high that I was referring to. So around 46, and we're sitting at 45.20. So if I was looking to take on a position, it would not be at the current level, just because I'm sitting beneath the key resistance level. So I'm thinking, based on everything going on in energy, that this is probably going to return, back above these highs. But the volume trends on this one's a little different than the one we just looked at with Anadarko. So I would probably pass on this and look for other ones within this space.
All right. Number 6 will be Nugget, NUGT. I was looking at Nugget.
Triple gold, I think. Inverse gold or actually triple gold. Daily Gold Miners Index bullish 3 times shares. Number one, I tend to look at the underlying index that these triple ETF shares follow, rather than look at the chart of the triple ETF itself, because a lot of times it can be giving you false signals because there's erosion in some of these over time. These triple ETFs are priced using derivatives and some other things that it's a little bit like options, losing money over time, but not exactly. But anyway, I think you have to be careful with these in trading off of the technicals on their charts. You really need to go to the underlying index. But having said that, we've been in a downtrend for a while. I think we're probably heading back to test this support level. And again, I'd want to use the underlying index. And I'm not quite sure which one this one uses, because I don't normally trade these triple ETFs.
Mm-hmm.
But you do have some support here down around the 25.5 area. We've been in a downtrend. I think that's more important than anything, is that we've been in a downtrend since the beginning of September. Yes, we're having a good day today, but I would avoid. I'm not a big fan of gold or gold miners at this point.
All right. The next one I have for you is Southwest Airlines, LUV.
All right. Yeah, the airlines had a really good first half of October and then kind of fell apart in the second half and into November. So let's see if we get the chart. Yeah, here's Southwest doing the same thing. But it looks like maybe the selling has slowed. The first key test, though, is going to be at this declining 20-day moving average, and we are getting close to it. So I think for me, if I was watching this, the thing that would stand out the most to me and what I would want to highlight is that we do have an upcoming 20-day test. Because when we fell below the 20, you can see it was holding on the way up. So the 20-day was providing support. Now with a big breakdown on heavy volume, I think that 20-day moving average is going to be a key area to watch.
All right. Let's see. The next one we have will be DWDP.
I think that's Dow.
Yes.
Dow. Yep. Negative divergence stands out to me, so I'm not surprised that we're seeing some weakness, but I still like the overall chart pattern. I think we just needed to consolidate for a bit, given those negative divergences. So if you're not familiar with the divergences, you can just kind of draw these lines there. You can see the MACD sloping down, price action moving higher. Normally when you're moving higher and you get the MACD moving up, you get a pullback and you hit the 20-day and you bounce. Make sure everybody sees that right there. But then once you get into negative divergence territory, I'm not as comfortable with these 20-day tests. And here, in fact, we actually have lost it. So I think there's two levels to the downside. First being that 50-day moving average, And then I think the top of gap support. So I'm going to say right between 68 and 70 is a key area of support on the stock. As it gets down into that range, I would actually be a buyer.
Okay. Let's see. Number 9 is Wayfair W.
All right. Well, I have bought things from Wayfair. Of course, I don't think anybody cares about that. The key level here is the top of gap support. And we went down, looks like we tested it right here, and we bounced off of it, which was a good sign. I'm okay with it, even though it gapped down with earnings. I think this is a big level in the chart. Now it's already bounced off of this level for what, maybe $6, $5 or $6, or actually maybe about $9. So I think that the reward to risk is no longer what it was when it was down to gap support. But if we return back down on light volume, back down to the 57, 58 area, I think reward to risk would set up pretty nice on Wayfair.
All right, very good. And our final one will be GM.
Well, this was the one that I was looking at as a possible setup for this week. So I'm a big fan of GM. The question is, it went up so fast and so far, will it hold at its first key support level? And I think the first key support level is at this gap support area. You can see this is where a lot of the volume came in. So I'm going to annotate the two key areas, I think, of the top and the bottom of that candlestick, because there was so much volume. So I'm actually looking for GM to reverse somewhere in that area. And notice that today, and we did have higher prices on the lower MACD, negative divergence, look for a 50-day test and a centerline reset. And we're just about there on both of these. Notice also RSI right now is at 40 during an uptrend. Normally RSI 40 provides some pretty decent support. So I think we're in an area where GM is going to start to find some pretty good support. And so if I had to do anything with GM at this point, I would be a buyer.
All right. That concludes 10 and 10, and we almost did it like exactly on time. I kind of helped us not start completely on time, but
that's all right. I mean, I was cheating a little bit at the beginning too. I already had one done, but
yes, that's helpful though, I think, for all of us too.
Absolutely.
Okay, I think it is time for a market update. So I will take everybody over there if I can make my clicker work here. All right. So I'm going to go ahead and let's go take a quick peek at Candle Glance for our final market update here. I just wanted to let you know, so we had hit all-time highs on the Dow, and I know the S&P, and it looks like intraday we're starting to set some new all-time highs, because you can see S&P 500 has bounced out of that consolidation zone just a hair. And we can also see with the NASDAQ, it's heading up as well, but it pulled back. So it's trying to just regain some of those gains it had earlier in the day. Russell 2000, really nice bounce here. We saw that the small caps are really struggling earlier today, but they are making a comeback and getting ready. Russell 2000 getting ready to hit a new all-time high again. Wilshire 5000 trading mostly sideways. Treasury yields down. UUP, the dollar, is down, and consequently we're seeing a nice rise in gold, but a really nice rise in gold, almost a straight up rally. Looks like we're pulling back a little bit now, starting to form an intraday flag. You can see USO is up and has also started consolidating. We could be looking at another intraday flag over here. VIX is rising slightly. We're now at 951, but under 10, we're still looking at some complacency readings. People are feeling still, investors are bullish. Advances are leading declines at this point in time. I'm going to go right back to our member homepage. I wanted to show you can do, here you can do your top 10 if you'd like to see who are your actives and big movers. Scooters are the best, though, in my opinion. When I want to see what's happening in the market, one of the things I look at are the scooters, the technical rankings, stock charts, technical rankings. Suggest you check them out in Chart School. But you can get these scooter reports for all of these different areas of the market. I thought I'd look at the US ETFs so you can see what our our top 10 are currently. And I know we just looked at REMX, and so that is in that hot zone and near the very top. It's third as far as scooter ranking in all of the US ETFs. But which are the ones moving the fastest currently today? TUR, which is the Turkey ETF. And we can see that we're getting a nice breakout here. I saw this chart and I wanted to talk about it as soon as I saw it. The only issue I would be a little bit concerned about is this area that was support, I think now is forming some pretty strong resistance. You can see we've had some trouble right up there. But this is a breakout. I think that looks good. I would probably add it to a watch list. I'd be wanting to see whether we can get that breakout, maybe a 2% move at least over the previous high we saw back in October. So I'll have to see. And that will conclude our last market update. Was there anything you wanted to look at, Tom, while I get my stuff together for the decision point report?
Yeah, I'll go through a couple of charts real quick while you're getting set up, because there were a couple of, we can take a little deeper look into the energy, for instance. If you're at the home page, which you should see on my screen right now, if you go in under the Pro Control Center and down to the reports and analysis tools, you'll see the sector summary. So I really start just about every day with this screen. I like to see what areas are leading the market to the upside. And if you wanted to go back and see, say, for a week or a month or 3 months, you can just change your period there. But today you can see the clear leader, without a doubt, is energy. Traders are really excited about crude oil taking out that $55 level on Friday. We've added to the gains pretty significantly today. So this group is really doing well. And if you click on the energy link, then it brings up the groups that make up energy. And you can see oil equipment and services up 4% today, over 4%. The renewable group, 3.7%. Exploration and production over 2%. And pipelines up 1%. But if you look at the OI, which is oil equipment and services, you can see that we went up. We essentially took out this prior high in July, went a little bit above. And when we came back down, we held the prior low. And now we're making this move back up. A breakout above about the 430 area, I think, would be really bullish for the oil equipment and services space. Of course, we've talked a lot about the renewable energy. I know First Solar, we mentioned last week with their earnings report, really helped this group break out of this sideways consolidation. And you can see that the strength continues. So this is a group that has very, very strong momentum at this point. And then the last one I was going to mention was the exploration and production group. And here, there's no doubt that the strength is in play. Off of this huge rise back in September, we consolidated a bit during the first few weeks of October, and now we are back off to the races here. So there's a lot of strength that we see building in energy. So I don't think that XLE is done at all by any stretch of the imagination.
All right. Let's see. Okay, I'm ready. Let's do this decision point report here. I'm going to start with what our Twitter results were, because I never covered that earlier. And sentiment is my thing. So this is the Twitter survey. We put it up last Friday, and these were the results. And actually, Tom and I, when we were polled Friday, Tom was thinking we would close lower on the week, and I was back to mostly unchanged, plus or minus 0.25%. But everybody, as far as our viewers, they're looking at the market moving higher. But I wanted to look very quickly at that Wall Street sentiment survey, because this is the survey I take. And so you can see what the quote unquote pros were saying. I'm actually in that 15% of people who went in neutral. But you can see very similar results. 55% are bulls, while 30% are bears. And look at that, 50% are higher on our Twitter poll. So kind of interesting information there. And now I'm going to move into the beginning of the decision point report. I do want to show you some interesting notations. But first, I wanted to show you let's see here. Got some stuff in the way. So here is the decision point scoreboards right now. I'm going to give you just a quick explanation as to what you're looking at here when you're looking at a decision point scoreboard. So these are our trend model signals. These are all generated on the daily chart, on the daily price chart. And they're all, because it's trend model, it's all about the EMAs. We use a 20, 50, and 200-day EMA, and it's those crossovers which give us the signals for this top row. So those are EMA crossovers. Now the PMO, it's a little different. The PMO signal in the short term is on your daily chart. The PMO in the midterm or intermediate term is on your weekly chart. And the long term is the PMO for the monthly chart. So that's where you'll find these signals. And so that gives you an idea of what you're actually looking at here. What is interesting, so first of all, we did get that PMO buy signal on the OEX on Friday. And, you know, it was kind of a whipsaw. And then this was the important one, because if you look, a month ago, all of the other indexes got their PMO buy signals on their weekly chart. And it took a full month for the NASDAQ 100 to catch up and get its PMO buy signal on the weekly chart. And we're going to look at those charts shortly. So the other thing, I'm sure that one of these things does not look like the other game, would be that big red arrow on the S&P 500. We've got all green on all of these four major indexes, but we're still seeing a PMO sell signal in the short term. So let's go look really quickly at those charts. The OEX, there is the PMO buy signal on the daily chart that we got, and you can see right there. And we're still looking at a rising trend channel. It remains intact. I mean, the rally is just, you know, keeps going. Now, I do want you to note on these index charts, we've got a really, ultimately, a very flat PMO that's been kind of showing some indecision here. But it looks like we do now have that buy signal. I'll have to see if we can break away from this zone, this sideways zone here for the PMO. Usually when you see a flat PMO, that means you're getting a steady rise. So it's a momentum calculation, and so that's why you'll if you're not seeing a difference in the acceleration, you're not going to see much of a difference in the PMO. So that's how that works. The NASDAQ, remember, was actually, let's go to the S&P 500. Remember, this was the one that still had the PMO sell signal intact. But notice, it looks like today we might very well see that signal change on the scoreboards. I'll be writing about that more than likely. But right now we're seeing an even number as far as when you go down to the 100ths on the decimals here. But I think when we do the calculations on the spreadsheets behind the scenes, we do it for the hundredths of, I mean, a thousandth of a point. So we should be able to get a reading out as a plus or minus today. But looking at that PMO, I suspect we're going to end up with that buy signal. So we will start to see all green on these decision point scoreboards. We'll lose that particular PMO sell signal. And I think that's just pretty much inevitable at this point in time. If not today, tomorrow. So here's the NASDAQ weekly chart. And remember, this is the other signal change that we just got. And there's that PMO buy signal. It was one of those that was a teaser forever. I think we were running with the PMO just beneath its signal line for at least 3-4 weeks, waiting for that positive crossover. We finally got it on Friday. And the one interesting thing I do want to note on this weekly chart is the fact that we did have, because this really goes back to Arthur's article and what we were talking about earlier, we had a bearish pattern. We had a rising wedge. And what's the expectation of a rising wedge? Well, it's a bearish pattern. The expectation is you're going to get a breakdown. Well, we're in a very strong bull market, especially with tech. Tech has just taken off over the last 2-3 weeks. So we got the breakout. We got a bullish breakout on a bearish pattern. So that is also what we could have expected because we have such a strong bull market going on. Bull market rules. So even though the pattern suggests that you would get a breakdown, I wasn't really expecting it to break down in a serious way out of this pattern because we were in such a strong bull market. But seeing it break out above there is no such thing as a rising tops line, but the top of this wedge, we got the breakout from that. And we can see it's still obviously on the week is up. And I like to see those breakouts, but it's nice that we finally got the PMO buy signal on the weekly chart. So right now, all of our indexes are looking very good. And as I said, we're going to likely lose that PMO sell signal on the scoreboards for the S&P 500. So I think that's good news. And pretty soon, probably by the end of the day, we're going to have 4 scoreboards with all buy signals. So you can't argue with that kind of timing signals. You just can't argue with how strong this bull market is and our expectations when we're looking at overbought conditions. How long have we been talking about the S&P 500 being overbought price-wise?
How long have we been on the air?
Yeah, exactly. So, you know what? Overbought conditions are not necessarily an issue when you're in a strong bull market. Of course, the question is then, well, how do you know when it's really going to be a breakdown? Well, that's when you start looking at all of our other indicators. So I'm going to take a quick peek at our indicators here. These are the climactic indicators. These are the ones that I look at to give me a day or two as to what to expect, sort of like your day trader indicators. Gives you just you can see whether you're getting initiation impulses or exhaustions for the next day or two. Unfortunately, I'm not seeing anything as far as climaxes are concerned. Usually you want to see these spikes to the upside or the downside, and that's when you can make your determination as whether we're looking at an initiation move or we're looking at an exhaustion move. And unfortunately, we're really not getting those kind of readings that we can read much into it. I think the interesting thing is that we are seeing the VIX has gotten extraordinarily low. On Friday, I know we had a reading. Well, you can see it closed at 904. So we are starting to increase a little bit. But what I noted is the fact that we're now above that moving average. Again, my scale is inverted. So we're seeing that we've got low readings, which is putting me on my inverted scale above that average. The reason I use an inverted scale, and I'll probably tell you this every single time I go over this chart, is because I do, when I'm looking at initiation impulses and exhaustions, I'm looking for those penetrations of the lower Bollinger Band or upper Bollinger Band. And I consider penetrations of the upper Bollinger Band when you get very, very low readings. That's when I expect an exhaustion move. That's when I would expect in the next day or two, we're going to see a pop downward. How long that continues, you could see the pop in one day, and then it'll come back up. And so you'll end up with a no change day, but at least you had that warning that, okay, we're looking at a possible initiation impulse or a buying exhaustion, etc. That's when I look for the next day or two as far as an impulse. I know we talk about the VIX a lot, Tom, and when we do get those low readings, that I consider overbought as far as the VIX on the very short term. But you and I also talk about the fact that if you want a bull market to continue to move up like we've been seeing, you need to have investors not too afraid, because then they will throw money into the market if they're not very afraid. So you do want to see those low readings to help fuel in the more intermediate term. Those are good. But I consider them overbought readings when I'm looking at those impulses and exhaustions in the very, very short term. Short term, which I would say is days to a week or two. I've been watching, and I've written quite a bit about the fact that we got a bottom on these short-term indicators, and we were seeing a nice rise on them. But I also added the ITBM, which is an intermediate term indicator, as well as the ITVM, and I'm going to show you that chart next. But what I was pointing out is that what we want to see so that we can get those nice rally moves off of these oversold readings is you really want to see the ITBM and ITVM pretty much going in the same direction, having that same bottom at the same time that we get these short-term bottoms. And we're not quite there. We got the bottom here on these indicators, but you can see the intermediate ones are still pulling down. So I wouldn't be expecting, a nice big rally move out of this oversold bottom that we got here on these indicators, mainly because I'm not seeing the intermediate term indicators turning around or looking a little bit more bullish than they do already. So, for example, here was a similar situation to what we have now. We had these really nice oversold bottoms on the short-term indicators, but look at what was going on with the intermediate-term indicators. While they were trying to decelerate here, they were still on their way down. And so, look, we didn't really get that much out of this move until we saw the bottoms on these intermediate-term indicators right about here. Now, let's look at that intermediate-term indicator chart right now, because then on this one I have the signal lines, so it makes it a little more helpful. So there's that, and look, we can see if you look on the thumbnail that it does look like when we go to the thousandths of a point that the reading is now above the signal line. What I want to point out, as usual on these charts, is you want to look for tops and bottoms on these indicators, and that usually gives you a good indication of what's going to happen in the intermediate term. And as you can see, we got those tops on these indicators, and they are continuing lower, like you saw on the short-term indicator chart for the comparisons. When you get these tops, typically, you're going to see the market move down, or in the case of 2017 after November, mostly sideways move, pause, maybe a little bit of a pullback. What I'm finding really interesting right now, and I'm going to pull up the annotation tool. I have a few more minutes here, and I'm going to go over the big four after this. But what I wanted to point out here, get my vertical line, is what happened after this particular top. And you can see it back here where they top back in here. But what happened? We're supposed to expect the market to pause or pull back, and we really haven't seen that. The market is still continuing upward. So what do we make of this? Well, what I make of it is that we're finding a way. These are oscillators, so they have to oscillate. And so they reached that overbought territory. It was time to turn down. The fact that they're able to unwind and move lower on the fact that we have a rally, I think that speaks again to the strength, the internal strength of this rally. Okay. I felt like there was somebody was going to ask a question, but we didn't, so that's fine. All right, so let's look at the dollar very quickly here. I call it the big four: dollar, gold, oil, and bonds. And we cover that in the Decision Point blog. Friday's blog, you'll want to read. Carl wrote it. He does, for those of you who are more intermediate to long-term investors, you want to read Carl's articles because that's where he focuses, is more on the intermediate to longer terms, typically in the weekly wrap on Friday. So you just go to blogs, look for Decision Point, and you'll find his article. Of course, I have articles in there during the week that I think are quite interesting that you might want to read as well, but don't miss Carl's articles. Seriously, I read them every week so I can get an idea of what he's thinking as far as moving ahead. But here is UP, the dollar, and I had pointed out this head and shoulders a while back, and I think, Tom, the two of us even talked about it as it was forming, and it has executed. We're taking a bit of a pause right now, but I still think we're going to hit that upside target. I came up with that minimum upside target. I'm going to talk about chart patterns on Friday, so you're going to understand this a little bit more, how to calculate a minimum upside target or downside target. So as far as a reverse head and shoulders, length of the pattern, add it to the neckline of the pattern, and that will bring us right about here. I think that my minimum upside I made just a little bit higher, mainly because I wanted it to match up a little bit more with this area of resistance. That I think that's when we're going to have a little bit of difficulty. But really, looking at this price chart, I think it looks great. I think you can make a case right now for a flag pull and a flag on it. And those are bullish patterns. So I'm expecting the dollar to continue its rise. And you can see a really nice strong PMO. OBV, as far as UUP, the ETF is concerned, is going in the right direction. I'd like to see a little bit more positive action here on the scooter. But I don't think that it overrides what we're looking at here, at least in the short term for UUP. Now let's look at gold, the other side of the coin. Pun not intended. Okay, so here we go. So let's look at gold. And again, I have been very bearish gold, and I continue to be. It's supposed to break down. I really think it's going to break down here. Look at this PMO. You know, we've had two tops. There's a big top below the signal line, and we're just now getting another one. A PMO top below the signal line is really bad news. A PMO below zero is bad news, and we already have the PMO below zero. So add the fact that we're getting that top below the signal line, also below zero, is not a good thing. Now, you could point to the scooter, and it does look like it's doing okay. What I wanted to point out, too, though, are premium discounts on the close-ended funds, the Sprott and Central Fund of Canada. This is how we look at the sentiment in regards to gold. And right now, you can see we have bearish sentiment. We have all these discounts going on. But as I've been saying, we don't have the kind of bearish readings on these discounts that I'd want to see to pre-rally on gold. We're not seeing that. It's not bullish, but it's not bearish either as far as those lengths. So I still am thinking we're going to get this breakdown. We're going to see it drop below that 1260 level. And I think 1200, I think we're going to see 1200. You saw how bullish that dollar chart looked. I think 1200 is a likely stop when we get that pullback on gold. And I do believe we're not going to be able to hold that support. I'm going to ask Greg his opinion on that tomorrow for sure. And USO, we did talk a lot about oil, but I did want to show you my particular version of the chart. And wow, when I looked at the chart earlier today, we didn't have that breakout to the degree that we do now. We're looking at 1150 readings right now, price on USO. Really, really nice. I wish I had gotten in, but I've been a little bit leery. So what we can see is that nice breakout there. We've hit this area of overhead resistance. I'm not too worried when I see a breakout to that degree. The PMO is looking pretty overbought here. But, OBV looks good. We're now sitting, look at this. We now have oil in the hot zone. And look at WTIC. That's the one that Greg had put up there. And you can see that really nice breakout. Looks pretty good. I'm going to go very quickly. I just wanted to show you the weekly chart. Actually, I think I'm going to do it this way on oil. This is WTIC. And again, that is the significance of a breakout right now above 55. So I wanted to show you that. And then finally, bonds, and then we can wrap it up here. And we can see, and actually I could move this back down a little bit, and we have a trading zone, but we're getting ready to hit that area of overhead resistance. I like the way my PMO is lining up, though. We got a buy signal. We also see a top. Even if the PMO begins to top, it's going to still be in a moving upward, which is a good thing. We have what I was looking at here is a likely double bottom formation with a breakout above a neckline. So I would be expecting a breakout. I'm looking for bonds to challenge the high we saw earlier, because we had what was looking like a head and shoulders pattern, but it clearly did not execute. It fell apart. We started to see it drop below that neckline, but it has made its move straight back up. I really like that PMO buy signal, so I'm bullish on bonds right now. And that completes my decision point report.
Okay, well, we are getting close to the end of the show. I do want to mention a few things. Again, if you're not a ChartWatchers member or subscriber, you can go to the blogs page and scroll down the right-hand side and join. We definitely want you to experience that newsletter every couple weeks, because there is a lot of time that's put into it. It's a free subscription, completely free. There's really no reason not to get it. You get a lot of different articles addressing many different areas of the market, so check that out. Again, want to mention that Greg Schnell is joining us tomorrow. He's going to talk some energy, and energy is the hot topic today for sure. And Greg will also go over some point and figure charts. And then on Wednesday, we're going to have Bill Shelby, one of the developers here at Stock Charts. He's going to come on and initiate a brand new segment, Everything Stock Charts. So he's going to come in and talk a little bit about price alerts on Wednesday, so be sure to tune in for that. And then again, Friday, Erin will be talking for a while about chart patterns and what she sees and what you need to look for and how they execute and measuring. I'm not going to steal all of her thunder, but you want to be here on Friday for that one. So we got all that going on. I don't know what your final thoughts are, Erin. You have any final thoughts as we close out today?
Final thoughts. Well, not really. No, I would say at this point, I really want to start. I want to see that dynamic with gold. I really want to be right. I want to see gold break down. So I'm going to be paying actually a lot of attention to gold at this point in time. But I think, I made the call that the market would end mostly unchanged. I still am behind that. I still think we're going to end up plus or minus 0.25% by the end of Friday.
Yeah. Well, there was one quick question that came in I just wanted to address real quick. And it was a question about defensive sectors leading, and is that an omen? And I think if you go back to the charts that I pulled up early in the show, showing the different sectors and what's leading the market to the upside, really the defensive areas are not leading. I mean, you may get temporary short-term leadership, but that longer-term downtrend line in the relative ratio of utilities and consumer staples, I think that paints a very bullish picture for the stock market. As we keep moving higher, it's actually the aggressive groups that have been leading. And again, it's not going to happen every day. But one thing that I am excited about is watching energy break out, because the bull market is made up of constant rotation from one area of the market to another. And now we've got energy, which is now looking for more money, breaking out above some key levels. So I'm pretty excited about this bull market. Someone else in the room, I think, had mentioned I was bearish on Friday. I just want to be clear. I am not bearish the stock market. Short term, from a trading perspective, we talk about where it might be a week from now and we get overbought. So from that standpoint, I think maybe we see a little bit of a pullback, but that to me is completely different than being bearish the market. I think Erin and I both talked quite a bit about you really don't fight the tape and that the market continues to move higher. Good news is we'll be back tomorrow because this week we did start 5 days a week. So if you were not around last week or had not heard, we are going to 5 days a week. So no more Monday, Wednesday, Friday. It's going to be every day. You can come in here anytime you want. And I know 90 minutes is a long time. Some of you probably don't have that much time, but just come in when you can. Just treat it as though it's a show. And when you can make it, come in. If you can't be here, you've got the 24 hours here at Stock Charts that you can go back and review what we talk about. Or you can go to Facebook or YouTube and you can go back even further to review the shows. So with that, I want to thank everybody for joining us today. Again, please complete that survey as you exit the show. Bottom right-hand part of your screen, how'd we do? There's a link, and it's just one question. Just give us your feedback on what you think of the show, the 5 days a week, whatever it is you want to talk about. But we'd love to hear from you. We do use that information to shape our future shows. As a reminder, Market Watchers Live now airs Monday through Friday from noon to 1:30 p.m. Eastern Standard Time. Have a great day, everybody. We'll see you tomorrow. Happy trading.